Hey guys, I just want to share with you another discovery we just made based on what a fellow ape just shared on Reddit, giving us another perfect example and illustration that the numbers around the share count, the numbers around the voting that's going to start in July, maybe will not give us the exact expectation that we're looking for. And again, give us another perfect illustration of how manipulated this thing is. So let's get into it, guys. This popped on Reddit. This needs to be seen. Share count legally can be reported as more than 100% of the float. There is a rule that votes counted cannot surpass 100%. There is a document posted here on this, post from this fellow ape on Reddit, and this is the source of that specific document. Well, pretty much they're going back to what happened in 2005, and they were a proxy for this same example of votes through proxy, so through another entity besides the company. In those cases where the brokers receive the information on how to vote the shares from the shareholders, they usually do not turn in more votes than they have actually the shares. Firms have procedures in place to adjust the votes in this instance. According to the Securities Industry Association, in an April 2005 letter to the New York Stock Exchange, they detailed a system of prorating the votes based on the number received according to the number eligible. If a broker receives 20% more votes than he has aggregated shares for, then he'd simply reduce the vote totals in each category by 20%. It is a simple system, but one that offers the potential of throwing out legitimate votes while retaining illegitimate votes. It also offers the potential for allowing the same share to be voted multiple times. So pretty much, guys, what this article is saying in simple language is even when we count, even we'll come to, counting the votes for the shareholders, that number is still not going to be the actual reality, because these guys never ever will disclose a number that will give that will prove out that we have much more people holding more than the actual float. That is as simple as it gets, okay? And this also proves that there are a lot more synthetic shares out there, and of course, naked shares than these guys want the market and the public to think of, okay? Pretty much whatever number the naked shorts and synthetic shares out there, the count was never going to exceed the total shares, as legally it cannot. Because when they receive the votes, if it's higher than the actual float, when they will do whatever they can in order to make it look like it's still 100% of the float, which is untrue. And how do we know? Because there was an example of another company again in 2005 named Global Link. So pretty much there are numerous examples of this. For example, Global Links Inc., which under an FOIA request determined that there were 27 million delivery failures outstanding for the company shares. This while Global Links authorized and issued shares stood at 1.1 million, or an amount of fails nearly 26 times the maximum float. 26 times, guys, the maximum float. Well, guys, where else do we know Global Links popped? There was a short squeeze in 2005. This is an article from Seeking Alpha. Global Links was a company that provided computer services to the real estate industry. By early 2005, the stock price has dropped to a fraction of a cent. So not even a cent, a fraction of a cent. At that point, an investor, Robert Simpson, purchased all the entire float, almost 1.1 million shares issued as outstanding shares. So he immediately took delivery of his shares and filed the appropriate forms with the SEC, disclosing he owned all of the company's stock. So the investment was then $5,200. But the day after he acquired all of the company's shares, guess what? The volume on the over-the-counter market was 37 million shares. And the following day, he saw 22 million shares being traded, all without Simpson, the owner of the entire float, trading a single share. How is it possible? How is it possible? And back then, the SEC had been conducting a secret investigation, but that will be difficult without the company's involvement. It is more likely that the SEC has not done anything about this fraud. So pretty much what happened here in 2005 gives us the perfect illustration that, hey guys, this is the exact same bullshit we're experiencing here on AMC Stock and GameStop and multiple other stocks as well in the market. But on TV, the hedges with other people are trying to say, no, this is not true, this is not fake. But we all know, just do the math, simple math, it doesn't add up. So even when we get to the point where we have the numbers around the shareholder vote count, guys, it will still be manipulated as it was done here for this company in 2005. And this also explains and perfectly illustrates the fact that there might be a lot more synthetic shares out there than we actually know. And that's why there is no way out for the hedges except to cover. And when they do, that's when we reap. Might happen next month, next week, we don't know. But we have time because it doesn't get simpler than just holding. That's it, just hold.